I'm happy now to turn to our panel on what are we doing. We have, as I mentioned, this panel is going to talk about what's going on right now, what's going on in the public sector, what's going on in the private sector, what's going on in terms of international cooperation to mitigate cyber risk to financial stability. We have three great panelists. The first one, and this is the order in which they're going to speak. The first panelist is Yaoseng Tan. Yaoseng is the Executive Director of Technology Risk and Payments and the Chief Cybersecurity Officer of the Monetary Authority of Singapore. He has extensive experience in the oversight of technology risk management, and particularly a lot of international cooperation with his fellow regulators and central banks around the world. And I hope he's going to talk about both of those things. Our second panelist is Greg Rattray. Greg is the co-founder of the Next Piece Consultancy and a senior advisor to Oliver Wyman as well. He's a former CISO, JP Morgan Chase. And prior to that, had very extensive experience in cybersecurity as both a White House advisor in the Air Force and the DoD. Last and not least, of course, Greg just happens to be a senior research scholar here at CIPA too. Last and certainly not least is Arthur Nelson. Arthur is a research analyst in the Cyber Policy Initiative at the Carnegie Endowment for International Peace. Carnegie has been doing work on international cooperation with respect to mitigating cyber risks for at least 5 years. And they recently published a report, International Strategy to Better Protect the Financial System Against Cyber Threats, which Arthur was a co-author of. And I certainly hope that he's going to speak a bit about that as well at the end. So without further ado, the speakers are each going to make some opening remarks. I will ask a question or two, and then we would very, very much welcome questions from those of you who are on the call. If you want to pose a question, please enter it into the Q&A box, and I will compile some of those and pass them along to the panelists in the second half of the panel. So, Yaoseng, the floor is yours.
Yeah, thank you, Patricia. First, I would like to thank Columbia University School of International and Public Affairs and the Federal Reserve Bank of New York for the invitation to speak on this panel. Indeed, the financial sector's shift towards greater digitalization has engendered growing interest in the study of cyber risk. I commend Columbia CIPA for publishing a number of papers on cyber risk and its implications on financial stability. This is an important area of study, and given that IT systems and financial services are highly interconnected within the global financial ecosystem. For the session today, I will cover the ongoing efforts and initiatives by MES to strengthen the financial sector's cyber resilience. I will begin by providing an overview of the key changes in the operational and cyber risk landscape observed during the COVID-19 and share how MES is responding to these changes. Microsoft CEO Satya Nadella aptly summed up the experience globally when he said that the company saw 2 years worth of digital transformation in a short span of 2 months. Indeed, COVID-19 has brought about many profound changes to the way we live and work, and many firms have been forced to transform their operations and business models. Within the financial sector, COVID-19 has accelerated the trends towards digitalization of financial services. We see firms and individuals rapidly embracing e-commerce and e-payments in recent months. Singapore's mobile e-payment platform, known as PayNow, saw transaction volumes grew by 6 times in the beginning of this year compared to the same period last year. So in light of social distancing measures, many FIs in Singapore had to reorganize some of the functions and operations to enable remote working arrangements. The unprecedented extent of remote working presented additional operational, technology, and cyber risks that need to be managed. For instance, the pervasive use of residential and public broadband networks used for remote working poses operational risks, as they are often not as secure and resilient when compared to the corporate lease lines infrastructure that we have in on-premise. Over the past year, MAS has observed global uptick in cyber threats arising from remote working, including COVID-19 themed cyber attacks and scams. In particular, cyber threat actors have been seen to target security weaknesses in remote access and collaboration tools such as VPN and video conferencing platforms. And so we have been asking ourselves within MES how we should, as a regulator, respond to these trends and changes in our FI's operating environment and mounting cyber risk. And we believe that our technology and cyber risk supervision approach will need to evolve in tandem with these changes. For example, we have been updating our supervisory approach to one which is more metrics-driven. To comply with social distancing measures, MES has reduced our on-site inspections and expanded our ongoing information collection from FIs to include key technology and cyber risk indicators, such as timeliness of security patching and antivirus signatures updates. This is to improve our ability to access FI's cyber risk posture. A key area that we are monitoring is FI's IT outsourcing and third-party risk. COVID-19 has highlighted the importance of managing this risk. Due to the lockdown imposed in many countries, some of the FI's overseas IT service providers were significantly impacted, and this has diminished their ability to mitigate cyber risk. For instance, cyber threat actors may target security weaknesses in FI supply chain and use them as launchpads. I believe many of us have been kept busy these few days due to a high-profile attack on a software vendor. To gain a better understanding of third-party risk, we have also embarked on a third-party risk cyber mapping project. The objective was to map out the cyber and network interconnections of FIs to identify key nodes within the Singapore financial ecosystem. As part of this study, we examined various cyber scenarios involving FIs and key service providers identified from the cyber mapping exercise and applied a framework to better understand operational and financial risk transmission channels. We also identified factors that could amplify the impact arising from a cyber attack and potentially lead to systemic outcomes. We believe that COVID will further fuel cloud adoption in the financial sector. As such, we are reviewing our cloud supervision strategy as well. The increase in cloud adoption brings about concerns whether FIs can manage the associated risk, including cyber risk, well, as whether there will be a buildup of concentration risk in a few major cloud service providers. In this regard, we are updating our guidance on cloud risk management and formulating an approach for supervising FIs that use cloud services. Next, I will share on MES cybersecurity transformation plan. Earlier this year, we embarked on a review to identify areas to enhance the cyber capabilities of both the MES and the financial sector. I will call out two of the areas that we are working on. First, we are developing a cyber threat model on cyber threat actors and attack campaigns that are relevant to the financial sector. Once the model is created, it can be enriched over time to track the activities linked to the threat actors and enable us to gain a better understanding of their motives and behaviors. This allows MES to more effectively share timely and actionable cyber threat information with FIs so that they can calibrate their own cyber defenses to prioritize their resources, security monitoring, penetration testing, and threat hunting, etc. Second, we are developing a financial sector cyber threat alert framework. The objective of this framework is to raise FI situational awareness about the cyber threat level specific to the Singapore financial sector. We will communicate to the FIs any changes in the financial sector cyber threat level based on a set of indicators. FIs will be able to develop and put in place plans to step up their control or risk mitigating measures, such as implementing enhanced monitoring during heightened threat levels. I will now move on to talk about cyber collaborations on the local and international fronts. MES has been working very closely with various stakeholders to help build our cyber resilience over the years. I'll highlight a few recent initiatives. First, we have been working with the Insurers Association in Singapore over the past year to conduct bug bounty program and to help identify security vulnerabilities in major insurance systems to enhance the overall cyber resilience of the insurance sector. Second, we are engaging the Association of Banks in Singapore to conduct red teaming exercises for the FIs to validate their cyber defenses against real-world cyber attacks. And third, MES has been organizing industry-wide business continuity exercise with our Association of Banks in Singapore since 2006. The sixth edition of this exercise, codenamed Exercise Raffles, was conducted in November last year and focused on cyber theme. The last exercise was conducted over 2 days and saw about 140 financial institutions responding to various cyber scenarios such as banking and payment service disruption, trading disorders, data theft, and the spreading of rumors or falsehoods on social media. Apart from working with financial industry, MES is working to deepen cyber collaborations with international counterparts. Among financial regulators globally, there have been efforts to support FIs to respond and recover from a cyber incident. For instance, the Financial Stability Board under the G20 set up a working group for cyber incident response and recovery, or CIRR in short, to develop a toolkit of effective practices to guide FIs' response before, during, and after a cyber incident. MES had the honor of chairing the working group, and the toolkit of effective practices was published in October this year. The toolkit comprises a total of 49 effective practices across 7 components, which include governance, planning, preparation, analysis, mitigation, restoration and recovery, coordination and communication, as well as improvement. A key pillar in our cybersecurity strategy is to build multilateral and bilateral information sharing linkages. On the multilateral front, we have been working closely with FSI-SAC to establish its Asia Pacific Regional Intelligence and Analysis Center to provide better support to FIs in this region. The APAC Center leverages on FSI-SAC's extensive cyber intel sharing and analysis capabilities to help financial institutions in the region to better understand specific threats targeted at us. Additionally, MES also engaged FSI-SAC and other like-minded financial authorities to establish a multinational information sharing forum for central banks, regulators, supervisory entities, in short, series. The forum mirrors the features of FSI-SAC platform for financial institutions and facilitates multilateral information exchange between financial authorities relating to cyber threats and good practices gleaned from supervisory and regulatory work. On the bilateral front, MES is seeking to establish new partnerships with other central banks and financial regulators. At the same time, we are also strengthening the current bilateral relationships with existing partners. For instance, last year, we have completed a bilateral cyber MOU with Banque de France, and we are currently working to conclude an MOU with the UK financial authorities. To conclude, the COVID situation has grown from a health issue into a multifaceted global crisis spanning health, financial, and social disciplines. One silver lining is that COVID has quickened the digitalization of financial services and its adoptions by individuals and companies. But this also means that technology and cyber resilience have become even more important in the financial sector. As such, I believe that regulators need to enhance and adapt our technology and cyber risk supervision approaches to meet the rapidly evolving technology landscape. So with that, I will end my sharing here, and I look forward to the panel discussion. Thank you.
Thank you very much, Yao-Sang. Our next panelist is Greg Rattray. Greg?
Thanks, Trish, and thanks everybody for participating in this activity. As was mentioned today, and Jay's stressed as we do this activity, this is a long-term project of CEPA, and one that I've been involved with since its inception actually when I was at JP Morgan. So I think this is a essentially important activity. I'm going to use the opportunity, no longer being at JP Morgan and being at CEPA, to speak, fairly directly about, experiences that, as I thought about this, are really 20 years in the making in terms of where I think, the current state is with cyber risk to financial stability, and really push hard on the notion that it is challenging to identify the scale of that. But if we don't grapple with that, we're going to risk strategic surprise, and we're not going to be ready for the things that might happen. So I'll walk us through a logic around that, and we look forward to the discussion about it. But I will say it's fundamentally informed by something Trish mentioned. I had the opportunity to command the operations group of the Air Force's Information Warfare Center. I had the opportunity to serve President Bush and Dr. Rice on the National Security Council. So I feel, these things were 15, 20 years ago, have a perspective pretty deeply, I think, on what strategy and warfare might look like in general, and how they may continue to apply to cyber warfare. And those have informed the experiences I had that Trish mentioned at JPMC, and in the formation of, Jason mentioned the FSARC, and many are probably aware of the formation of Sheltered Harbor, trying to deal with systemic risk to the financial services sector. But I'll sort of end with the challenges I've had this past year with the New York Cyber Task Force, which I think has been a great experience, but I will talk to trying to push the boundaries on the task force of like how bad a bad day could be 5 years from now. So if I put the bottom line up front, I think that there is a challenge we all have of really looking at the scale of the risk that could occur, and really positing what severe but plausible scenarios we should be planning against. But if we don't do that, and understand how risk might manifest itself at scale, we run the risk of strategic surprise in terms of an event or an adversary causing instability in the financial system or a variety of other systems. So I really just wanted to focus on two sets of experiences I've had in the last few years that have illuminated this to me, and I wanted to push this morning New York time on it. First is watching the evolution of the dialogue on ops resilience. I had a perch in a GSIB at the time that this concept was being developed. Actually talked to the UK regulators before they even put out the initial discussion paper in 2016, and I've had a pretty close-in seat in the evolution of that, including even now in my consulting practice, and watching institutions try to identify what they consider the severity of severe but plausible scenarios to plan against, and do things like define impact tolerances. I see a challenge in that, these attacks, I'm going to focus solely on the cyber dimension. These attacks could be very severe, but if an institution was to document that and say that, destructive malware could wipe out, a large portion of its server infrastructure, and then, try to decide the timeline for bringing that back up, the appropriate level of risk assessment or acceptance that you would have, the types of investments at the board level that should be made to mitigate that risk, is very difficult for them to forward lean into. And, I think there's been a back and forth between the regulators, who I think appropriately would like the firms to arrive at a set of plausible scenarios that they're prepared for, and are willing to hear from the firms what the right scenarios are, depending on the context of the institution. But the institutions themselves have a very hard time grappling with pushing the severity up past almost what we see day to day today. I mean, if we look at the the current, events, the threats as Jason described can be very sophisticated. If the current set of attacks which are propagated were actually destructive, like we saw with NotPetya a few years ago, the types of outages we might be currently suffering from could be very severe. So I wanted to, start with, the fact that I believe essentially that the ops resilience concept is correct, but in implementation, I still see 4 years into trying to work through the idea, a hard time really documenting severe scenarios that would require the types of risk assessments and investment decisions. And, I think that does challenge the system as a whole. Again, I think the financial sector, if I do look at it, is the most forward lean into understanding systemic risk and making structured organizational progress. As we've mentioned, we have the FSR stood up, which has now become the ARC, combining forces with the energy sector. So, I do think things are underway at this point, but they are not global. One of the challenges I think that the types of people on this call, need to think through is how to link efforts across borders. Again, I think most of us see the financial system is particularly global in nature, and the shocks in the global system transmit themselves cross-border very quickly. And one of the challenges of these deeper risks is it's easier to organize at a national level, especially when they intersect with national security. So I think this, this is something that certainly I felt was an issue when I was at a GSIB. I still think is prevalent, is sort of well recognized, but the degree to which we're organizing systemic resilience cross-border, I think, is limited. I wanted to spend the last few minutes talking about the experience I've had as the current executive director of the New York Cyber Task Force, which is a Columbia-sponsored task force which involves a set of leaders from both the policy realm, the business realm, as well as academia, with a real focus on trying to look at major cyber issues from a business perspective to inform both Washington in our case, but governments, as well as to inform the technology leadership out in Silicon Valley, but do that from a business-focused perspective. And we decided with this year's task force efforts to focus on a concept called operational collaboration. But what we decided to do was do the work in light of scenarios, one of which was financial sector focused, that would occur in 2025. And I will tell you that, again, the notion that people have a hard time wrapping their heads around the plausibility of very bad things happening came home to me again during the course of this past year. We identified a little bit more, a few more than 23 drivers of risks that could occur just in general in cyberspace that would have national security level implications potentially, and that many of these drivers could mix together in what I've termed toxic brews. But we formed 4 scenarios with different adversary sets and different industries at risk. Again, one was focused on financial services. I'll talk a little bit about the drivers we focused on there and the types of risks we identified. But what I found was it was very difficult for people to think that the adversary would scale the attack to something that my national security experience tells me would be a natural decision of a nation state attacker if they were to use cyber attacks in a coercive way against a country, going across sectors, going at multiple systemically important institutions, like in the financial sector, going after GSIBs, market clearing organizations, companies that would feed data into the market, data providers, again, data processors, all simultaneously over days, weeks, and even months in a sustained attack it really was difficult to get people to, wrap their head around that. And we tended to pull back the severity of the scenarios to something that was more manageable so we could wrap our heads around practical things that we could start doing in 2021. One of the things that I did think was very illuminative, which is really a present threat as opposed to a future threat, is we spent some time on the growth of the digital underground and ransomware and the use of cryptocurrency and potentially states sponsoring, basically the growth of cryptocurrency as a way to destabilize the system to enable criminal activity to grow and scale. And Jason described how bad that has already gotten, and the fact that ransoms are getting to be tens of millions and ransomware groups of numbering over 100 and making $2 billion and feeling like it was time to take an exit, right? So, that's a present risk today. And I feel like we have not properly grappled with what I'm going to suggest are solutions, or not solutions is too strong, the road forward when risks get to the national security level, which is we really do need to identify the sets of scenarios or contingencies. And this is going to belie my military background. In other national security realms, when we think there might be a war in a region or a certain adversary has developed new technology capabilities that require our ability to deal with that adversary, we form contingency plans, and we strongly exercise those in as realistic a situation as possible. So to my mind, and I've worked a lot on this problem, certainly from my current perch, but even while I was in government, we have not defined national or global contingencies that are severely stressing and come up with detailed plans to respond to those. We have some response structures. They are mostly agreements to coordinate in response. They are not assigning the level of responders, the necessary actions. They don't envision having common operating pictures or the ability for organizations to quickly see what the other organization sees in terms of threats and adversaries and responses. They don't cross well yet government and private sector boundaries, though again, there are some hopeful efforts underway, including in this sector. But these planning exercises and then doing these contingency plans and then exercising them, if you look at the way we prepare for other military or national security contingencies, a lot of investment goes in exercise environments and the conduct of exercises, people taking time to do those exercises, the fidelity of simulations that are used to conduct those exercises, people sitting in their real seats doing exercises with their real systems in order to have a sense of whether they're going to work at the scale necessary. These things, I think are essential. And I just it's been a mantra, of mine for probably 4 or 5 years. I do see hope. The Solarium Commission, in the United States, has put in the National Defense Authorization Act, which, assuming that it passes, calls for a joint planning cell, which, I think the FSR and the financial sector will be on the forefront of the evolution of that, which looks at planning for these contingencies at this scale. But at the core of this is the issue of investment. So I'll leave it with this. When we invest in real risks in a national security way, there's a program for an air superiority fighter, and I can say this because I'm an Air Force officer, that is a $225 billion program. It's the F-22 program. That's a 10-year spend for the F-22. That is to create air superiority for a country that hasn't lost an airplane in air-to-air combat since the Vietnam War. We make those sorts of investments. We make hundreds of billions of dollars investments in order to make sure we have the capabilities necessary if things get bad. We need to identify what's bad, where we've got some thinking going on that I tried to outline about that, and we need to make the investments necessary going forward if we're going to mitigate systemic risk. So, Trish, I'll leave it with that.
Great. Thank you, Greg. And last, Arthur Nelson from the Carnegie Endowment.
Thank you, Trish. Let me first thank Trish and SIPA for having me on. So the Carnegie Endowment, for those not familiar, is a foreign policy think tank, and we've been working in this space for about 5 years. And about 18 months ago, we gathered a group of experts from around the world and industry and the national security community, the diplomatic community, supervisory and regulatory community to bring them all together and test an assessment around where we stood on international cooperation to address this risk. And the assessment was essentially that post Bangladesh, when the world woke up to the idea of cyber risk in the financial system, all of the initiatives that had been taken on were excellent, but somewhat reactive and certainly independent. And so our drive was to come up with a strategy, a blueprint for how to build connective tissue between those initiatives and lay out a long-term vision for how to connect and maximize the impact of some of the work that was being done, not just by the supervisors, not just by industry, but also by the diplomatic community, by the development community focused on financial inclusion. And so about a month ago, we put together a report that Trish introduced, and I'll walk us through very briefly with 2 quick slides. And on this first slide, you'll see us mapping the space and identifying that fragmentation between the communities, where we see not the initiatives that have been laid out are all excellent, but there's an opportunity here to connect them better and maximize their impact. And we had 4 strategic principles as we approached this. The first was that greater clarity about roles and responsibilities were required. And as Greg very excellently outlined, we're not quite sure who's responsible for protecting the financial system when we think about it in an international setting. And so identifying how the G20, the G7 can play a role in clarifying and organizing themselves better is essential moving forward. The second was that international collaboration is necessary and urgent, really based on the recognition that no one institution or government can address this problem alone, given the global interdependence of the financial system. The third was that reducing fragmentation will free up capacity to tackle the problem. And this gets to, as Jason was talking about, the drive to harmonize regulatory oversight, but also to ensure that as we pursue things like capacity building for addressing cyber risk in the financial system, or pursue law enforcement initiatives to tackle adversarial threats, those are coordinated and we're best using our resources. And this is particularly important in the context of the post-pandemic recovery, as resources are already going to be limited. And the final principle that we had in mind was that protecting the financial system can be a model for other sectors. There's a shared interest around the globe in ensuring that the global financial system is resilient. And we can't say the same, that shared interest doesn't exist in other sectors. And so working through the financial sector, we hoped to bring about a greater degree of international coordination. And so we put together this strategic framework, and I'll just quickly move through some of these priorities that we identified. It's based on 6 key priorities. The first is cyber resilience, which you've already heard about today. The second is around international norms, and this is about shaping state behavior in cyberspace to ensure that states are acting responsibly. The third, and we've talked about this a little bit as we've discussed operational collaboration, is really around how do we respond collectively and deter attackers more effectively to really reduce the amount of malicious activity we're seeing and ensure that there's a deterrent in place against some sort of catastrophic event that we might see. The fourth is on workforce, and let me just foot stomp this quickly. The entire globe is experiencing a talent shortage when it comes to cybersecurity talent. And so identifying the models that work effectively to upskill and train that talent is essential. The fifth is on capacity building. Here we've seen a number of institutions from government and industry in emerging economies request assistance from more mature institutions around how to better manage these risks. And so organizing those capacity building efforts is essential to maximize the impact with limited resources that we have. And the sixth is on digital transformation. As we all know, the financial system is undergoing a massive transformation as we shift through the fourth industrial revolution. And we're especially focused on securing the last decade of gains that the G20 has put in place through their financial inclusion efforts. And this gets to financial stability in economies where there's a much greater reliance than you might find in Western economies on things like mobile money and digital financial services. If we look at Kenya and their adoption of M-Pesa, cyber risk in those systems could have financial stability implications. So I'll stop there with the slides and let me just conclude outlining the 5 tracks that we're working to implement some of the recommendations from these reports through. So over the next year, our focus is on implementing the 33 recommendations and 42 supporting actions that we laid out in the strategy, which is really supposed to be an evergreen document for the diplomatic community to see what the supervisory community is doing and vice versa. So the first track, we'll be working with G20 countries, and in particular the Italian government, as they're holding the presidency in 2021, to identify the politically achievable recommendations in our strategy that we can then take forward and hopefully inform the G20 planning process. And the idea here is to lay the groundwork for this long-term 5-year vision about how the international community can cooperate better. So some of the key recommendations around that will be around financial inclusion, will be around capacity building, will be around how the Financial Stability Board and global standard setting bodies can support efforts to align oversight and guidelines, and also around how we can get heads of state to elevate this issue and build a process, an interagency process, an international process, a forum where countries can, in the event of a crisis, work together to address the risks. That level of communication and cooperation and that process does not yet exist and needs to be put in place left of boom before a significant incident were to occur. We need to have that process established ahead of a significant incident. The second track will be working with G7 countries. Again, our focus is on building that process out where countries can come together. We've seen more of an appetite for G7 countries to work together. There's a higher degree of trust among those members. And I would highlight an interesting development in October where the G7 finance track and other G7 members committed to sharing information around ransomware threats. So that was a clear step forward, and we'll continue to work with G7 member countries, particularly around renewing the Cyber Experts Group mandate, which is the group of members of G7 countries that get together through their finance track and have been very successful over the last few years, and hopefully will continue to move together and perhaps expand that to include some other like-minded countries. The third track is really working through the national security and diplomatic communities. This includes some of our past work working at the Munich Security Conference to host a war game simulating what an attack would look like. And we'll continue to engage not just with the Munich Security Conference, but also work with law enforcement, with the Financial Action Task Force, as some of these communities that are not necessarily core to the issue, but have much to do with how we would respond to malicious behavior, need to be incorporated in these conversations. The fourth track, we developed this strategy in partnership with the World Economic Forum, and so we'll be elevating some of the recommendations of our report and some of the topics that we've discussed here, as my co-panelists have outlined, at the annual meeting that the World Economic Forum is hosting in Singapore in May. And we'll bring those towards industry stakeholders to the CEO level so that we can really elevate the issues that need that are most pressing and need immediate attention. And then finally, the fifth track will be focused on how we can begin to think about cyber risks in financial inclusion, as these are beginning to have systemic implications as we see the scaling and rolling out of digital financial services in emerging economies. And so recently we hosted, just last week, a conference bringing together financial supervisory communities and central bank staff with the development community, industry focused on financial inclusion. We had keynote remarks from Her Majesty Queen Maxima, from the IMF director, and it was really around building the connections and connective tissue between these two communities who are just beginning to think about the cyber risks involved in these initiatives now. And what we want to avoid is duplication of effort and conflicting guidance from, on one hand, financial supervisors, and on the other hand, perhaps groups like the Alliance for Financial Inclusion or the G20's Global Partnership for Financial Inclusion, and even telecommunications regulators, where those digital financial services are built upon. So let me stop here. I'm looking very much forward to the conversation and discussion from my co-panelists. I'll end with a note of thanks to Jason Whitty, to Greg, to Trish, and to Yao Sang, who've all been instrumental in putting this strategy together. Yao Sang and Jason both sat on our FinCyber advisory group. And so it's a small community, but we very much appreciate the support they've provided, and looking forward to the discussion.
Great, thank you very much, all three panelists. So I have and a reminder, if anyone in the audience has some more questions to submit, please feel free to do it through the Q&A box, and I'll compile some of those in a couple of minutes. But let me take moderator's prerogative and ask a couple of questions first. I can't not ask a question about what's happened in the last week, or rather what has been announced in the last week. As we all know, with cyber threats and cyber attacks, the attacks happened some time ago before you find out about them, and even longer before generally before they're made public. In each of the realms that you focused on, so this is a question for all three panelists, the regulatory world, the industry collective efforts world, the international cooperation worlds. From your perspective, what have we learned in the last week? Anything new that have shaped your views or changed your prescriptions? Maybe those were already reflected in your comments, but I'm curious, because the sheer scale of attacks, particularly here in the United States, of course, but around the world, industry, public sector, private sector, you name it, at least from an awareness standpoint, would seem to be pretty important. So how have your views changed about both what we're doing and perhaps maybe where we go next? We'll give a little lead into the next panel. We want to go, you can answer in any order, but Yao Sang, you want to start?
Yeah, sure. Thanks, Patricia. Yeah, I think when we first heard of the first news about FireEye, right? We were really very, very surprised, because I think FireEye is one of the most sort of renowned companies, cybersecurity companies, and it has customers, big customers, and highly respected company, cybersecurity company, and yet they were infiltrated by a hacker. So when we first learned of this news, we were really very, very surprised. But it just served as a reminder that actually nobody is safe and nobody's immune from cyber attack. And it also means that we really have to work harder and be more careful and vigilant, and never to be complacent. So this is a message that we have sent to our financial institutions, to actually be really more vigilant in terms of managing cyber risks. So I think there's a lot of work to be done. I think over the next probably a few weeks or months, we probably learn more about the attacks, and I hope that we'll all emerge stronger after this episode. Thank you.
Yeah, Trish, I guess I'll go next. To me, the events of, I guess, both the last week, with FireEye and now the revelations that, the attackers have, utilized a software company and that potentially, many enterprises are at risk. I think that's fair to say. How much the attackers have actualized that risk should not be a surprise. Like, these types of attacks have been going on, the use of software updating to do targeted attacks or to lay in, potential access or disruptive effect against large numbers of institutions. I mean, worms have existed since the Morris worm in 1998. We had, so propagating software and vulnerability is clearly not a new thing. The fact that it can go from an update software and a software vendor, the revelations around Stuxnet made that clear a decade ago. And that nation states will do these things, and use commercial enterprises. What would be surprising is that, that people are surprised, right? Because these things are inherent in the technology we use. They're inherent in our speed to use the technology more fully for very good reasons, for business competitiveness, for being able to do remote work during a global pandemic. But we are assuming risk at a pace that we're not willing to admit. So I think that should be a revelation. Thinking through, especially if it turns out that many governmental enterprises, and I don't know what the analyses I've seen have been mostly US focused, but I assume that software that monitors networks is a globally distributed piece of software. If we see that the attackers are deeply inside scores of institutions, that might help people realize the scale of the risk assumption that we have. Again, I'm sure that software is very useful for those who use it to manage their networks. They assumed risk when they used it. It is hard to get rid of that risk. Having been on both sides of the offense-defense equation in a national security organization, attackers have inherent advantages, which is a good segue, Arthur, to your comments, because if you don't make it dangerous for attackers, which I don't think comes from vigilant defense only, then these attacks will continue to pose sort of grave risks to stability.
I think there's a lot that we don't know, and we'll be learning much more over the course of the weeks, if not months. So a few initial thoughts. First, I think it highlights the importance of accounting for the unique nature of cyber threats in this broader discussion around operational resilience, and that adversaries can time their attacks, plan their attacks, and particularly state-sponsored activity can be very sophisticated, and that's a reminder of this. The second piece I'd highlight is that when we think about deterrence by denial, I think this is a reminder that that can't be the only piece of the deterrence equation. And so obviously here, this was a very sophisticated operation. And as we consider how to deter malicious activity in the financial system, we need to go beyond deterrence by denial. And I think it's also a reminder about the deteriorating appetite for cooperation in cyberspace writ large, not just in the financial system. And so not only do we need to think about how we collectively respond and deter attacks, but also think about how do we build confidence and trust where possible among nations that are often considered adversaries. So thinking about areas for confidence building measures, and we can use the financial system as an avenue for that. And then again, I think it's just a reminder that the ecosystems upon which the financial system operates is expanding quickly, and third-party risk is becoming even more important.
Thank you. I want to pick up on both of those, but it's kind of two separate questions. So let me start with first of all, one, several of you mentioned offense as well as defense, and that made me think immediately of the ransomware issue that several people brought up, including Jason Whitty earlier. Both in terms of the international coordination, or maybe even domestic coordination between the law enforcement and the defenders, but also on the playing offense versus defense. This, I'm going to tie this into one of the questions that an audience member sent in about, is the best defense in this is to make it impossible to move the money around, or rather make it incredibly difficult to move the money around. Now that's an international cooperation problem too, because a lot of these are international transfers. I'm curious as everyone's view as to whether you think, given that there is some international cooperation at very high levels in place, is that a place to start? Is that a test case? I realize it may not be the most systemically important one, but just from a sheer cooperation across different pieces of the ecosystem within a country or internationally, is that a place to sort of test drive this or not? I'm curious of quick reactions.
Just a clarification, test drive the notion of collaboration.
Of collaboration, and right, of both playing offense instead of defense, and secondly, doing it internationally. Sorry, excuse me.
I'll venture in. I'll venture in saying that idea that maybe one of the best ways to defend the system is not to defend the computer systems, but is to limit the incentives for the attacker by making it hard to monetize ransomware. I actually think that's structurally a very sound idea, right? Because to my point that I think we should invest more on defense, but I think, the notion that we've got to make it dangerous for attackers, I think has to be part of our calculus. I do think we've moved, over a decade-long time frame more and more in that direction. I think it's appropriate. I think for those who are aware of the Solarium Commission recommendations, one of the strongest positions of that report is the appropriate level of disrupting attackers is a defensive maneuver. So like you've got, it's a very delicate balance to draw to be non-escalatory, but if you could find ways to justify to a wide range of stakeholders disruptive activity against botnets, against ransomware groups, against people that are subverting software in the supply chain, and it would make the system more stable if appropriate actors were authorized to take disruptive actions, but didn't cross into becoming offensive risks themselves. So I'll leave it there.
I'm happy to chime in on this one. I think you're exactly right. We have to remember that adversaries, particularly financially motivated adversaries, are still organizations, oftentimes criminal organizations, with a business model. And if we can identify ways to disrupt that business model, it does not have to be through any sort of offensive cyber capabilities. We can go after how they cash out. And there's a lot greater appetite and willingness to cooperate on financial crime than there might be on cyber crime. And so there's been a lot of success through the efforts by the Financial Action Task Force, through breaking up money mule networks in Europe through EMA, and law enforcement cooperation on that piece. So any way that we can disrupt and introduce friction in adversaries, particularly financially motivated adversaries' business models, will go a long way towards reducing some of this malicious behavior that we're seeing. And this topic around dual criminality, as we think about law enforcement cooperation, it's very difficult, particularly in certain countries, to have two countries recognize the same cyber activity as a crime. But you see much more recognition of dual criminality around financial crime. And so there's more of a foundation for international cooperation if we're thinking about going after the money.
Yes, please. I was saying, sorry.
So I think on topic of offensive cyber defense. I thought it probably is a bit difficult because I think in the cyber space, I think attribution is very challenging. We often don't know who is behind the attack, and hence I think it will be challenging to take an offensive posture to fight back or to attack back. All right. So the other thing I think I'm a true believer of collaborations. I think we are in a much better position now. I think over the last few years, I think internationally we have a lot of initiatives, a lot of cooperation and collaborations in terms of cyber, and I see over the last few days as news starts to be released and shared by the two firms, right, about the attack vectors, the IOCs, how the hacker might have got in and what are the things to look out for. And we see that the community actually starts to share this information and try to develop measures to mitigate the risk or to scan for IOCs and what are the things to look out for. So I see a lot more collaborations across the community, and I think that we are in a much better position as compared to probably 5 to 10 years ago. The other thing about fund transfer, I think there are two conflicting objectives, right? In e-payment space, we like things to be frictionless. Money moves from one account to another, across banks, across borders, in a frictionless way, and that is the objective that we are trying to work out. And it also benefited the fraudsters or the cyber criminals, right? When they get the money, they can actually cash the money quite easily through withdrawal from ATMs, through money mill accounts. So I think so there are two conflicting objectives here, but I think that that there are areas that we can actually again collaborate in terms of sharing of money mill accounts, sharing of potential sort of indicators that a fund transfer could be a fraudulent or criminal related one. So I think, again, I think collaborations probably would help in mitigating some of these fraudulent fund transfers. Thanks.
Great. Thank you very much. First of all, of course, we have a couple of questions from the audience, not to mention I had one more, but I just looked at the clock and I realized we're already a minute over our time. So so I'm afraid that we have to close this panel. A few of the audience members asked some informational questions about where things are published. We will try to get back to you with that information directly or post it on our website so everyone, for everything that's in the public domain, we'll put those up so everyone can see them. In the meantime, I want to thank our 3 panelists. This was a great panel about where we are now. A little bit of a hint to where we might be going, but that's for our next panel. Right now, we're going to take a 15-minute break so everybody doesn't get too much Zoom fatigue. But stay tuned. We will be back at 10:30 to continue the conversation about what's next with cyber risk and to financial stability. Thank you all again.